So let me introduce you to Marc Burman. Marc is a certified financial planner, and I'm just going to hand straight over to you, Marc, really, just to tell us a little bit about yourself and what we're going to be talking about today.
Great. Well, thank you very much, Alka, for introducing me and inviting me along today. So today we are going to be talking about life assurance and how that can be obtained for healthcare workers. Now, what I'd like to do is just tell you a little bit about myself once my screen catches up with our Zoom meeting. Okay, so this is myself, and just to touch briefly on my qualifications. So I'm a certified financial planner, level 6 advisor, which is one of the highest levels of qualifications you can have as an advisor. Member of the Society of Trusts and Estate Planning, so I could advise on inheritance tax and estate planning. And also, just to top that off, I'm a non-practicing solicitor. So that's a little bit about me.
Fantastic, thanks, Marc. And what are we focusing on specifically today?
Okay, so today the main areas that we're going to be looking at are, can you still get life cover as a healthcare professional, taking into account everything that's going on out there right now. We're going to talk about how you can get cover and how to avoid what I call the sharks out there. Also how to work out how much life cover you actually need. Can you put the cost of life cover, life assurance, on expenses? And finally, how to safeguard any payouts from a life assurance policy. So that's what we're going to be covering off today.
Great, I think that's really comprehensive. I guess my first question is exactly as you say. So, how do you actually apply for life insurance cover?
Okay, so assuming you're actually making applications, that's assuming that you've worked out how much life cover you need and over what period of time. And they're two things I'll talk about in just a moment. The process is really making an application to an insurance provider. Now, as part of that process, they would ask you lots of questions about your current health and your lifestyle. So your lifestyle would be, whether you drink, whether you smoke, whether you have any dangerous pastimes, so that might be potholing or jumping out of a helicopter, what have you, because they would need to assess how risky it is to provide cover for you. Now, depending on your health, also the background of your family history, you will be given a quotation for the cover. It will either be on standard terms or what we call on a loaded term. Now, a loaded term means that they see you as a slightly higher risk, and accordingly the premiums will be slightly more expensive. But the essence of it is it's an application taking into account the risk to the insurance company.
Okay, that's really helpful to know in terms of the sort of standard terms and the loaded terms as well. But do you think then, Marc, that COVID-19 has impacted on this process then?
Okay, so what's really interesting is over the last 5 or 6 weeks, what we've found is a lot of these insurers have added these 4 questions to the standard questionnaire. So you can see the questions just on the screen there. Has the applicant tested positive for COVID-19? Do they have symptoms of COVID-19? Are they self-isolating? And have they had contact with someone suffering from or suspected of suffering from COVID-19? Now, what's really interesting is that last question, question 4, is very relevant for healthcare workers because, of course, the nature of the job. And normally, if the answer to any of these questions was yes, then the application would be put on hold until it was no longer the case. Now, that could be quite some time, which is not ideal. But what's really interesting is over the last couple of weeks, what I've been finding is a couple of the providers have been slightly changing their terms and conditions. So what they're now starting to say, and it's just starting with 1 or 2 providers, but it might be the case it'll change to other providers out there. They're saying that where the applicant has been in contact with someone suffering with symptoms or has COVID-19 through their working environment, i.e. doctor, nurse, frontline, etc., then they can still make the application. So they have waived that requirement that they are no longer suffering from COVID-19. Now, that's quite a large shift. It does come with a caveat, and that is that if somebody comes into contact with COVID-19 outside of their workplace, then they'll have to go through the normal channels. So a long answer to your question, they can still apply for life cover in the current circumstances if they are healthcare workers.
That's really helpful. I guess I was frowning at that fourth question sort of quite a lot, because have you had contact with someone suffering from or suspected from suffering from COVID-19? That's the nature of our job. That's what we're doing at the moment. That is the sort of contact that we potentially are exposing ourselves to. So to not be able to get life assurance on that basis is quite worrying. So is this something that has then got that loaded premium you were talking about, or could this still be under standard terms, or is the question being removed completely? Just for a bit of clarity for me, Mark.
So yes, so the terms, the questions will still be on the application, but if a doctor, nurse, anyone on the front line is applying for life cover, they will apply for it in the same process as they have before, and allowances will be made as part of that application, taking into account that they have had contact with someone with COVID-19, but the application will still be progressed as normal, so they can still apply, and there's no reason why it won't be placed on risk as well.
Perfect. That's really reassuring. Thank you for that. So where do you start then when it comes to sort of getting cover if you want to set it up for yourself or your family? Where do you start?
Okay, well, I'll answer that question with again another slight caveat. And I don't know about you, but some of us are on social media a little bit more these days, and I seem to be getting bombarded with adverts from companies offering life assurance. What's interesting, they're using lots of attention-grabbing adverts and lots of hooks, etc. We don't really know very much at all about the companies that are online offering this type of cover, and importantly, we don't know who underwrites them. Now, what we're talking about is something that's really serious. We're talking about something that's representing a payout to yourself or your family, and we're talking about life-changing amounts when it comes to life assurance. So I would say that it's imperative that when you do take out life assurance, you go through a reputable, authorised, regulated advisor.
Right. So who is that, Mark? What is that all about? How do we know who's regulating you? It's such a sort of sometimes a difficult language for us to understand. So who do we look for to sort of help us with this specifically?
Okay. So I've put together a checklist of who you should be looking for and who can help you with this type of thing. So this is the checklist. Ideally, someone who is independent and has access to all the insurers out there in the market. So not someone who's tied to a particular provider. Okay, and that's really important. So you have complete flexibility and choice of the provider that suits you. Importantly, they must be regulated by the Financial Conduct Authority. That means if you log onto the FCA website, their details will be on the website. And that means they're liable for the advice that they give you, in case that gives you an extra level of comfort and support. And finally, they must be fully qualified to provide this type of advice, so ideally with a level 6 qualification.
Great, yeah, that's really helpful to know what sort of pointers to look out for. Just to go back to, I think what you said right at the beginning was knowing how much life assurance to take out. How do you know what that figure is actually?
Okay, I mean it's funny because having advised in this area for many years, a lot of clients would often approach me and say, look, we just want X amount, we just want £1 million for our family, we just want whatever it might be, and it's really important that the amount of cover that you seek is tailored to your personal circumstances. Otherwise, you risk being overinsured and paying more than you need to be paying for your insurance. So, how much life cover do you need? The starting point will be to look at any debts or liabilities that you might have or your family may have that you would like to have settled in the event of death. The other consideration a lot of my clients think about is, okay, well, if the worst were to happen to me, what aspirations do I have for my children or other family members? What would I like to happen regardless of whether I'm here or not? So I've just put down here that, it could be helping them through university, helping on the property ladder, and that type of thing. Other considerations would be, what's the cost of living for the family? We'd like to think that the family will have at least the same, or certainly, if not the same, certainly better quality of living on the passing of, a parent. That's another consideration. And some families have charitable contributions they might be thinking about. And finally, I've noted here that some families may want to settle some inheritance tax liabilities. Now, inheritance tax is quite a big area, but again, that's something I can expand on another occasion. But these are the main factors that you might want to have in your mind. Now, what I will say is that there's quite a lot of moving parts here, and all of these things are going to be affected by inflation. So if you've got children who are 5 or 6, it's going to be a number of years before they go to university. And the cost of university will increase over time due to inflation. So it's really important that any figures that you're talking about or you're thinking about are inflated to take account of inflation costs rising over the longer term. So that's something that can be calculated for you by a financial planner.
All right, lots to consider actually, isn't there, Mark? I guess one thing that comes into my head is, when is the best time to take out assurance? Is it now? Is it later? Is it with dependents, without dependents? What sort of things do you take into consideration when thinking about, I guess, when?
Well, putting aside, the current climate and the possibility of contracting COVID-19, as you get older, the cost of life assurance increases. And it's based really on how the insurance companies quote for this type of cover. It so happens that every time you pass a 6-month anniversary of your birthday, the premiums or the cost of a quotation will increase. So really, although this might sound counterintuitive, the best time to apply for life cover is in fact when you're healthy and when you don't have any medical concerns at all. Because if you do, God forbid, become ill or suffer with a particular medical issue, there's a chance that you may then become uninsurable, or the premiums may be loaded. So the idea is, if you're fit and healthy, it's better to do it much sooner rather than later. In fact, do it right away, I would say.
Sometimes, though, I think cost can be sort of quite prohibitive to taking the plunge to something that doesn't feel so acute and needed right now. So are there any ways of sort of supporting costs or circumventing costs? Can someone else, for example, pay for assurance on your behalf, or is this something that you have to do yourself?
So there are certain approaches that can be used in paying for these types of policies. So what's really interesting is there's a form of insurance policy called a relevant life policy. And essentially, this is a policy that is taken out for an employee by the company that they work for. So when we say an employee, that could be a director or a standard employee. And effectively, the company would pay for the premiums on behalf of the individual, the person assured, and the cost of those premiums will be tax deductible for the company. So just a definition here. So it's the relevant life cover is a term assurance policy available to employers to provide tax-efficient life cover for their employees. Now, what's interesting is, say, the company pays the premiums. The premiums are treated, and this is really important, particularly for a lot of business owners. It means that they can put the premiums down and they will be classed as a company expense, which in turn will reduce the corporation tax bill. And for the employee, importantly, those benefits are not taxed as a benefit in kind. So it doesn't add to their tax liability. There's no capital gains tax involved. And interestingly, the benefits will be paid outside of the estate for inheritance tax purposes and won't count towards annual or lifetime allowance. So there's a lot of plus points in approaching the insurance this way. There are some conditions, and those conditions are that you can't be covered beyond age 75. Okay, so at 75, the policy must lapse. And also the amount of cover that you can obtain is capped at 30 times the applicant's salary. So they're the caveats. But what we often find is with that 30 times multiplier, that's often sufficient for the level of cover required for a lot of my clients.
Right. Okay. I'm just thinking about sort of different ways that GPs work. So there are some portfolio GPs who have set up their own businesses. So this could come under that umbrella, could it? When you were talking about directors being able to take this out through their businesses.
Yeah. So particularly limited companies, this
Yeah.
is ideal. This is perfect for limited companies. Also, if there's a director who has life assurance already, but he or she is paying for this personally, then if they were to put that up on company expenses, as it were, or set up this type of policy, on average, you'll find that they would save 49% of the cost of premiums because they're saving on the tax allowances as well. So there's lots and lots of plus points for this type of cover.
Right, okay. And I guess the flip side that I'm kind of thinking about is a little bit about safeguards, because it's quite a lot of quite large sums of money that you're talking about that are available. So what are the safeguards that are put into place then?
So that's a really relevant question because we are talking about life-changing amounts of money here. So what is often advised is that these types of policies, when they pay out, they're actually paid into a trust. Now, a lot of people think, oh, trusts are just for, very wealthy people. They're very complicated to set up, et cetera, et cetera. That's really not the case at all. So trusts are really very easy to set up within this area. The application forms for a trust will come with the application forms for the application itself. Often the forms are provided by the insurance company, and your financial advisor can help you complete these forms. The benefit of being paid into a trust is, first of all, on death, you're not subject to probate. So you don't have to have all those probate delays, et cetera, et cetera. It means the money will be transferred directly into the trust and could be used immediately for the beneficiaries. Importantly, the value of the payout or the insurance policy does not add to the value of your estate. So again, I don't want to go too much into inheritance tax at the moment, but what we don't want to happen on death is a large lump of money going into someone's estate, because that potentially could be taxed at 40%. So this amount is paid into a trust outside of the estate, and then loans can be made to beneficiaries. So we keep it nice and efficient from a tax point of view. And again, the final point is what we call bloodline protection. And what that is, it protects that sum of money to make sure it stays within the family unit, within the bloodline. So it protects against potential claims from other third parties, for example, from divorce and creditors and what have you. So again, putting into a trust has lots of plus points and lots of benefits for the family.
Fantastic. Gosh, I've assimilated a lot of new information in that short time, Mark. So thank you for sort of giving us the headliners. Is there anything else that you want to sort of leave us with at the moment?
No, that pretty much sums everything up. The key is to take professional advice, make sure the person you speak to set this up is regulated. They can also help you calculate the right amount to make sure you're not overinsured, and also help you put it into trust as well. But the key here is just taking professional advice throughout the process.
Yeah, no, I think that's really helpful. And I think the other key thing is to think about life assurance and keep that at the forefront of something that you think about doing now rather than later, really. So thank you very much. If people did want to ask more questions, because I'm sure they will be after this, or wanted to speak to you for some independent advice, where do they find you? Where are we going to be able to get in touch, Mark?
Okay. So yeah, anyone who would like to get in touch with me, a good starting point would be to have a look at my website. which is marcburman.com. There's lots of interesting articles on there that I'm sure you'd find useful, or you could reach me via email or via LinkedIn. So that's the one thing I'd like to point out, of course, when it comes to regulated advice. Of course, I'm fully regulated. I need to explain that any advice that I've given today or any information I've given today isn't personalised advice. So everyone needs to be made aware of that. But I'm more than happy to answer any specific questions on the contacts that are in front of you now.
Thank you so much. I think I'm going to draw to a close there, Mark. I found that extremely helpful. You've given us some great sort of top liners to think about, demystified some of the processes and really brought us sort of up to date, particularly with those COVID related scenarios as well. So thank you very much.
Pleasure. Thank you very much.